Everyone, welcome to part one of the finalist business plan competition. Congratulations on making it to the final round. My name is Tara St. Clair. I'm the Director of Operations for the Encova Center for Innovation and Entrepreneurship. I'm going to be getting us kicked off here today. Just a couple of housekeeping things. Please keep yourself on mute unless you are asking a question. And if you don't feel comfortable unmuting yourself and asking that question, you are more than welcome to put it in the chat and we will ask it for you. We will be starting the day by hearing about how to write your business plan, and then we'll go into a deeper dive into those different areas of the business plan, including today's speakers and topics, which will include the financials, business law, and then we'll get to hear from a lot of other subject matter experts next week in the next part two portion of the workshop. I'd like to say thank you to our speakers today. So Sharon Stratton will be up first. She is with the West Virginia Small Business Development Center. After that, you will hear from Amy Pridemore, who is with the W Center for Financial Literacy and Education. And finally, we will hear from John Williams with the W Law Clinic today. So without further ado, I will stop sharing my screen and let Sharon take it from here.
Okay, great. Okay, let me bring up my presentation. All righty. So I'm Sharon Stratton. I'm with the West Virginia Small Business Development Center. We're a small agency. Actually, it's part of the state of West Virginia government, but it's a really tiny agency, and where it's only about really a handful of people that do what I do around the state. We're lucky that we have two people in the Morgantown area, one in Fairmont, another in the Eastern Panhandle, and we're scattered around, but we get to work and help a lot of different entrepreneurs, people that are starting a business, as well as people that have been in business for a long time. So let's jump in. We're going to talk a little bit about business planning, but first we're going to talk just a little bit more about the Small Business Development Center. Probably 50% of the people we help are already in business. Of course, in the last 2 years, been helping a lot of those people stay in business by helping them get the COVID funding that was out there. Maybe you heard something about economic EIDL, which were grants that were loans. Those are loans in particular that were out there, came through the federal government to help businesses stay in business. There were Paycheck Protection Program funding, all kinds of things that we had to cram and learn about to try to help these businesses stay in business. But probably half of our time is spent with entrepreneurs like you that are wanting to get a business started and up and off the grounds. And we help all different kinds of entrepreneurs, professional people. I've got clients that are dentists and architects and all kinds, florists. I mean, it's just a whole variety. There's been a lot of growth in HVAC repair. That's been a popular thing that's been started recently. We've seen a lot, like several years ago, I helped with even starting a gun range in Morgantown. So there's just been all kinds of things. This is an interesting entrepreneur that he has different lines of income coming in. He has a retail shop in the Morgantown area selling things, but he also manufactures probably most of the items that he sells. He also manufactures them. So it helps a lot to have different lines of business coming in, having different streams of income coming in. Certainly with a business, that can help you, give you a boost. As the business grows, it helps a lot to see if there's ways that you can find different streams of income coming in. So of course we help with brick and mortar companies. This is an interesting business. This is a client that I've worked with for years and years. Tatham's over in Preston County. They have talk about different lines of money coming in. They sell at farmers market. Here he is at a farmers market. They have a cafe. You can call them and get a dinner to go on Saturday night. They'll have it all packaged up for you. They have a bed and breakfast. Of course, they have landscaping services. They sell plants. They can design your landscaping for you, or freshen landscaping. So talk about different lines of income. They've really figured out a way to do that. So if that helps a lot with a business sometimes, because of economic things that go on that you can't control, maybe business goes down in one area, but you're spread out doing different things. This is something that they've developed over the years. Certainly this business has been around a long time, but they've managed to get different sources of income coming in to help even out the highs and lows of one particular industry. So it's just an interesting thing that goes on sometimes. Sometimes people can manage to do that kind of thing. So like I said, we're part of the state of West Virginia through the Office of Economic Development. And we partner with a lot of different groups. Besides partnering with WVU that hosts my office, we also partner with the SBA, the U.S. Small Business Administration, and we're knowledgeable about all the programs through the SBA, including the guaranteed loans, the SBA guaranteed loans that are done jointly with the SBA and a bank, or with a microloan fund. So we can help people get ready to apply for those kinds of things too. A lot of what we do is helping people apply for loans. We've had some clients that have gotten money through venture capitalists too. And we're always looking for different sources of money. There's also a few nonprofits around that have specialized funds for different industries too. And if you work with one of our business coaches, they can talk with you about different sources of money that are out there. Now, we just finished going through an accreditation. Every 5 years. We apply to be accredited through our national organization, which is the Association of Small Business Development Center. That's our national organization, all the SBDCs all over the nation, and you can find them in every state, are affiliated with ASBDC. That's our umbrella organization. So we just finished being accredited again for another 5 years, which basically means that we have the same processes and procedures in place as other SBDCs, so that we have quality counseling. Basically, that's what it's all about. And you can take a look at our website, which is wvsbdc.com. That's wvsbdc.com, and you can see all the different opportunities on our website. It lists all our different offices around the state, their contact information, and there is a lot of free training on our site now too, so take advantage of that. The training goes on constantly, and a lot of interesting topics we've been trying to hit. So take a look at wvsbdc.com, and that'll connect you to different counselors. So now that we've talked a little bit about the SBDC and what I do, let's jump in. I know this is why you're here, to learn more about business planning. So obviously the business plan has to be a document that's so clear that anyone could pick it up and understand about your business, even without ever talking to you. So it's I know that Tara sent out the handout that I forwarded to you, and that's pretty clear about what all needs to go in there. But basically, the best place to start, obviously, is by making sure your business description is very clear and explains what your business does, how it's going to achieve its goals, what it's going to accomplish. So that's always the place to start, is take a look at that. It needs to be so clear. Anyone that's never met you can understand about your business and the direction your business is going. I mean, that's the basic part of it. And so let's jump on and look further at things. Now, I was trying to explain kind of an overview of a business plan, and I thought about an article I'd seen a long, long time ago in the New York Times. And this was a drawing of the Metropolitan Opera. And I thought, in kind of a way, there's parallels with a business plan with this, because in the center of the drawing is the stage. That's the part that the audience sees, but that's also like that's the place where you're showcasing your product right there on stage. And your customers, your potential customers, is like your audience. They're seeing your product right there, and you're showcasing it and marketing it. But there's all these other things that go on behind the scenes, and this is the back view of the Metropolitan Opera, as you can imagine, if they sliced open the back of it. And then you see all the other things that go on in order to run this business. There's a lot of different things going on. There is a prop department, and they're busy doing that. There's people that are manufacturing clothing and costumes, and that's going on. And behind the scenes, there's people that are doing strategy. There's leadership going on. There's accountants and bankers and lawyers involved. So I mean, it's is kind of in a parallel way, like putting on an opera. You've got to have all these parts that are in there. So you have to think about kind of a high view of your business plan and make sure you touch on all these different parts about the business and what it's going to take to put this on and be successful. So I just thought that was an interesting kind of parallel to take a look at. So let's jump in further and talk more about the business plan, because literally you want to think about all the little details that's going to help you be successful to operate this business. And that's what you need to explain in your business plan about how it's going to be organized. You have to think about legal structure. You have to think about who's your target market and how are you going to reach them. You have to think about their channels of communication. What do they use and look at every day to get information? So that's where you need to be with your marketing for your business. And then you have to obviously explain literally how you're going to make money. How is it that the money is going to flow into the business? Is it through one channel of selling one product, or do you hope eventually to be able to expand and provide a service besides selling a product? Or are you going to sell multiple products that are somehow connected and similar to each other? What is it you're going to do to make money, and how are you going to proceed in other years, future years, in order to expand this business? So you've literally got to be able to tell this story of your business so that potential lenders or investors can understand what's going to make this business successful. And keep in mind that lenders and investors like to know whatever experience you have in this business. Maybe you've interned in a business like this, or maybe you have advisors that have worked in a business like this. That's important to give them some kind of level of comfort as to how it is that you've landed on this type of business. How is it that you think this business is going to be successful? And if you think, oh, I don't have much experience in doing this, well, that's when you can talk about some mentors or advisors that you have. And ideally, it'd be someone that's been in this type of business that could give you some help and advise you as you go and grow with this business. That's one of the things they look at a lot. They also look at how you're going to market the business. That's an extremely important thing. I see a lot of businesses in their first year of business kind of do a scattershot when it comes to marketing, and they may do a whole lot of different types of marketing, but if they don't track the results of the marketing, then they don't know what's really bringing in their customers. So it's always important to think about where your potential customers are getting their information, and that's where you want to be. You want to ideally be there where they're spending their time and getting their information. What avenues of communications do they use? Don't go out and pay for a billboard and an ad in a newspaper when your customers are not looking at those things. They're looking at their smartphones, of course. But you'd be amazed how many people in that first year of business have money they just got from the banker, and then they start doing all kinds of marketing with that, and then they wonder 6 months later, where'd all my money go, and why don't I have a lot of customers? So that's what it takes time to sit down and write what it is you're going to do in the way of marketing, but that's an important area to think through and explain that to you, to the people that are reading the business plan. So it's always nice to start off with a pitch, and maybe someone has already talked to you about a pitch for your business. But it's a one sentence basically that sums up about your business and what you do. And it should be catchy enough that it grabs the attention of your audience and tells the what the business does, essentially. It's something that conveys how you're solving a problem. You're talking about the benefits of the business in the pitch, and it should be something that catches people's attention because you're talking about a solution to a problem that people have. So maybe, for example, you're running a Thai restaurant, for example, so you don't want to just have a pitch that says, oh, my Thai restaurant is serving authentic Thai food. Well, that doesn't excite anybody. You want to have some kind of a pitch that goes along the lines of, we're selling unique flavors of Thailand. That sounds much more exciting than just saying, oh, we have authentic Thai food. So, I mean, you want something that catches people's attention. Maybe you've created a device that can be used to make a hairstyle in seconds, for example. Well, you don't want to just have a pitch that says this is a brand new item to fix your hair. You want to talk about how you can create hairstyles in seconds, something exciting. That's what the pitch is all about, to grab people's attention in one sentence, tell people, what it is your business can accomplish. You're talking about the benefits of your business. Some people call it the elevator pitch because it's supposed to be so short that if you jumped into an elevator on the first floor with someone that's a potential investor and you strike up conversation with them, by the time people go up in the elevator and get to their floor, you've told them, what your business does. So people used to do that in Silicon Valley all the time. They try to jump into the elevator with these people that had a lot of money. They would try to pitch them. That's exactly where the pitch came from. So you've probably heard people talk about the pitch, but the important thing is talk about the benefits of what your business can do. The old saying was, don't talk about the steak, talk about the sizzle. So that still holds true. But indeed, that's what you want to do to catch people's attention. People get so much information these days, it's like information overload. So somehow you got to create a pitch that catches people's attention and is memorable. So that's what you're looking for. So basically, like I said, you need to describe that business. That's the first section of the business plan. I think y'all done fine with that because you've gotten this far already, but now you need to spend more time developing other sections in the business plan. Basically, there's 4 sections in a business plan, but you can add more to that if you want to, if you think you need to. But usually things flow from the business description as the first section on to the marketing section. Indeed, there's a lot involved in marketing, so we're going to spend a little bit of time talking about that. And then usually it flows on to the part, which is extremely important, about organization and management. And you'll see that that handout I sent you flows along these same lines with these 4 sections describing the business, the marketing, the organization and management, and then the financial section. You can add other sections if you feel like you need to. If you have a prototype for something and you want to spend a whole section on that, that would be a good idea, because investors want to know all about the prototype, and you could put the drawings of the prototype in the addendum in the back of the business plan, but talk about it. Same way with the organization and management section. You're going to spend time talking about the experience you have, or any kind of knowledge you have of this particular business. That goes in the management section, because that's extremely important to try to give your investors and your lenders a level of comfort where they see, okay, this person really does understand this industry. Okay, this sounds like someone that I could take a chance on. So that's an important section. So you talk about your skills that you bring to the business in that section, but then you usually put your resume in the back section of the business plan, the addendum section. So let's dive in a little bit farther into the business plan here, because like I said, in section 1, you're talking about your product or service that you're selling, and you're trying to persuade people that indeed this product or service is going to solve a problem. Besides talking about the basic things about the business, like, if it's a brick and mortar place, you've got to talk about location. If you're positioning yourself on a website and you're selling everything over the internet, then you want to talk indeed about, what it is you're selling, and how it's going to solve a problem for people. And you can't just say, we're the only ones out there doing that, because there's always some alternative thing that people are using now to solve that problem that they have, to help them, get through their day a little bit easier. And of course, people love convenience. That's a big thing that is driving the market these days, is convenience. So if you could make something more convenient for people, easier for them to order, just a few clicks, and they will have it on their doorstep in just a few days. People love that, and they'll pay extra just for that service. It's all about convenience, is what I'm seeing. So like I said, but you got to solve a problem indeed for your customers. So, but then in the marketing section, that's where you're trying to explain that indeed there's enough customers out there for you to make some money. You've got to be profitable. You can't say for the first 6 months we're going to lose money. So that's not your goal in running a business, certainly. But so you've got to explain in the marketing section about who your potential customers are. And there obviously could be different groups of potential customers, and you want to mention about them and try to show how many there's going to be that you think you can reach through different channels, as well as what channels are you going to use to reach these customers. Because you can't just say, oh, I'm going to make $1 million in my first year of business. You've got to break it down as to where you think you're going to find these potential customers, and how you're going to reach them, and how you're going to convince them. And indeed, your business, oh, sorry, there goes my phone. Thought I had done that. That happens all the time. So, so you've got to convince whoever's reading your business plan that indeed you will be able to attract enough customers to be profitable. So you've got to explain who these potential customers are, and how you're going to reach them. So it could be through a variety of different ways, certainly. And a lot of it's going to be because people spend, I saw one estimate that people spend up to 6 hours a day on their smartphones, that they seem like there's people that have them in their hand even before they get out of bed in the morning. So we know that in every business plan, part of your plan to reach customers is going to be about social media. So you think about where these potential customers spend their time. Is it on Pinterest or Instagram, or is it on TikTok? Where are they? So that's where you need to figure out how you can reach these potential customers. Yes, you probably all want a website, but you need to have a lot more than just a website to get those customers to interact with your business. So it takes other ways to draw people to you. Now, an efficient website also has links to all their different social media platforms. So you'll see links to TikTok and Twitter and Instagram and Pinterest and all these things. And this is just one of the ways right here that people can reach potential customers. And this, when people do a Google search for a business, this comes up, which is the Google page for a business. And this is a free and easy way to have another opportunity for people to interact with you. You can see on here, it gives basic information about the business as far as where they're located and their phone number. And it's so easy that people can push a button and call that business. But it also is a place where the business owner can give information about the business and what they do and throw in that pitch line. And you can also see reviews by customers that have been to that business. And this is the Google page. So when you search on Google for a particular business, this is what pops up on the right-hand side when you're looking at your laptop. But if you're searching through your smartphone, this is what comes up as the Google page. And it's free. So there's another way that a business can market that doesn't cost anything. So it takes a variety of different ways to get the word out to the customer, but basically you're in the marketing section, you need to explain the top ways that you think the majority of your customers are going to find you. So that's what you need to talk about. Now there's other subsections in the marketing section because marketing is pretty intense these days. There's a lot of different things to learn about. And one of the things to put in a business plan is a competitive analysis. A competitive analysis, which you'll see in my handout on the second page of it, is where I recommend you list your top 4 major competitors. Now, you probably know what's out there already that people are using for a solution for the particular problem you're solving. Maybe there's other, if you're running a Thai restaurant, maybe there's other Asian restaurants out there. If you're developing a new product, there is some way that people are already solving that problem. Other products that are out there. If you're developing some kind of a new device for people to have a new hairstyle, when you look on Amazon, there's all different kinds of little devices that people can use to create buns or pin up their hair or make their hair look more fuller. I mean, there's all kinds of little devices to try to make people more attractive. That's a huge market, but maybe you're patenting, getting a patent on some kind of device that's going to help someone fix their hair and make a new hairstyle. Well, that's where you want to list your top 4 competitors. No matter what industry you're in, there's got to be at least 4 major competitors out there. So you literally want to list them by name. Don't be shy about that, because your potential investors want to see that indeed you understand the market. You understand who you're competing against. So you want to list everything you can find out about these top 4 competitors. Now, you may not be able to find out as much as you'd like to know, like, what are they making a year? Well, unless they're a publicly traded company, you're not going to find out that kind of information. But you can certainly look and see at how they market their product, what their price point is, what benefits they say their product has, those kinds of things. So literally list your top 4 competitors. And this will help to give your potential investors a level of comfort to see that indeed you understand about this industry. That's an important part that people look for. A lot of people leave this thing out, a competitive analysis. They think it's not that important. They understand the industry, but it will impress your potential customers, your bankers, your investors if they see that, oh, they've got a competitive analysis in here. Let's take a look at that. ideally, once you've gone through this little competitive analysis, listen your top 4 competitors, and you mention, what they're doing right, what they're doing wrong, then usually you put a statement at the bottom of this competitive analysis section that says, and my niche is this. This is how I think I will be successful competing against these major competitors. You want to explain, okay, here's the playing field, essentially. This is who I have to compete against as my biggest competitors. And this is where I see an opening for me in my business. This is how I think I can compete against these companies that are already established. I have a different way of doing it. It's maybe faster, whatever it is that you think you're going to do better than these folks, better solution. You explain that, and that's the gist of a competitive analysis and explaining that. Now, another thing that's going to impress your investors is if you talk about your strengths, your weaknesses, your opportunities and threats. Maybe you've already heard of a SWOT analysis. Some people get so involved in the business plan, they include a SWOT analysis. And SWOT, strengths, weaknesses, opportunities, and threats. And you can dive in and you want to be able to give not a sugar-coated look at your business, but a very blunt, to the point analysis of the business if you're going to do a SWOT analysis in here. And that's where you talk about what your strengths are, what your knowledge is of the business, how you're solving the problem better than anyone else, as well as what your weaknesses are. So a weakness may be, oh, haven't been in business very long or haven't sold anything yet. But you could overcome that by having, advisors and mentors on your team, certainly, as well as looking for opportunities. That's where you can talk about, oh, I have another product that I'm working on. I'm working on a prototype for a second product that's in the same industry, and I think I can get a provisional patent on it, that kind of thing. Or maybe I'm going to expand into a particular service. That's the opportunity section when you're going to talk about that. And of course, there's going to be threats. Threats sometimes are things that we can't control, like pandemics and a bad economy with inflation. But we're all dealing with that when we're in business, certainly, indeed. But that's the gist of a SWOT analysis, is talking about your strengths, weaknesses, opportunities, and threats. And you'll probably surprise whoever's reading your business plan that when they see that you've actually done a SWOT analysis. That's not something that you see in every business plan, that's for sure. But the fact that you've gone in there and taken a real good look at the business, I think they'll be impressed when a potential investor sees that you actually did a SWOT analysis in the business plan. All righty, let's look at the third section. We've talked about business description as well as marketing. And this is another section, indeed, that people spend a lot of time on when it comes to organization and management. This is where you want to think about all the skills and experience you bring to this business, and you're going to write about that. If there's more than one person involved in it, you want to talk about the skills and experience that everyone on your business team brings to the business. And then traditionally their resumes are in the back of the business plan in the addendum section. This is also where you'll talk about the legal structure for your business. Maybe you're setting up a limited liability company, for example, and you want to talk about a percentage of ownership, what experience each owner brings to the business, the strengths of your management team, and as well as listing who your mentors and advisors are. Maybe there's a lawyer that's working with you. Maybe an MBA is working with you. Maybe a business owner that's now retired, or a special advisor that's helping you. List them by name. That's going to there again, give a comfort level to the banker or the VC that's actually interested in investing in your business. They'll see that you're not just, running this by yourself. You're looking to get the best advice you can through mentors and advisors. This is also the section where you want to talk about how you're going to keep track of your income and your expenses. So what kind of accounting system are you going to use? Are you going to use QuickBooks? That certainly gives people a level of comfort because they're like, oh, they thought about accounting this early on. That's great. That's an important thing because I've seen people, just put receipts in a shoebox for the first 6 months and they don't know whether they're making a profit or not. And wow, I've seen people because they got that loan and they had a lot of money to start with, but they weren't watching to see, whether where they are with the amount of money they have left. They're just spending it. People get excited about, oh, I've got $50,000 to spend. I just got this loan. But it helps a lot to keep track of that every week to know where you are and if you're making money yet. And you want to be careful with what you decide you're going to spend because it's hard to get another pot of money, as we call it. And certainly you can't go and get one within the first 6 months. You can't go back and get a second pot of money usually. That's usually impossible at that point. So you have to really guard that cash when you do get it and try to keep track of how you're spending your money. That's an important thing. And that way, if you're looking at it weekly, then if you find, like, for example, one marketing idea, if you're paying for Google ads on a particular set of words, maybe those are not bringing in customers, you realize after the first month. Maybe you want to tweak that a little bit. So there's just all kinds of things you can do, but you've got to keep track of what's bringing in your sales as well as how you're spending your money. So it's good to mention some kind of accounting program like QuickBooks that you're using for the business. Other things to talk about in this section would be things like insurance, liability insurance, things like that. Sometimes when you get a loan, people require you to have what's called key man insurance. That means that the lender, and it's a pretty common thing, the lender will ask for you to get an insurance policy so that if you drop out of this business, then the loan will be paid off through this insurance policy. That's called key man insurance. That's something that's very common to have that. All righty, well, let's keep running through here. Obviously, one of the things you have to mention in the organization and manage section would be legal structure. And I know people are going to be talking further about legal structure with you. So I'm just going to give you the high overview of that. You've got to think about your business being registered with the state of West Virginia and with the federal government and state government. So and if you're inside the city limits, the city, So there's different places you've got to register this business, but you've also got to think about a name for this business. So you want to do a search to make sure that you come up with a unique name for the business. That's always a good idea, and look to see if you can get a domain name for the business. And then you want to think about getting an FEIN number if you're setting up a limited liability company, and you will need to register with the state of West Virginia. Usually people do that on business4wv.com, or you can set up an account. There is a break for you if there is a young entrepreneur waiver that reduces the cost of setting up an LLC from $130 down to $30. So that is fantastic that our legislature enacted that so that you can indeed get a break on setting up an LLC. So there's that requirement. So you have to be always aware of the state requirements, federal requirements, as well as city. If you're inside the city limits, whether it's Morgantown or Clarksburg or Bridgeport, or um, whether you're in Buchanan or Elkins, there's city permits if you put your business physically inside of the city limits. So those things you need to take a look at also. But here's a picture of the one-stop shop, which also has a little business startup wizard that'll help you understand about the type of legal structure that would work best for you. Pretty handy site, business4wb.com. You can set up a password protected account and actually register your business through the state that way. Pretty neat way to do that these days. All righty. Now, when you're working through the business plan, the sections that are extremely important, obviously, are describing the business, the marketing, the management and operations. And traditionally, the fourth section is the financial plan. And that's where you're explaining how much money you're going to need for this business. And indeed, like I said, you can have other sections in the business plan if you want to. It's like I said, an example would be if you have a prototype for an item, you could have a whole section on the prototype if you feel you want to do that, an example. But these are the basic sections that I've talked about. In the financial section, you've obviously got to list all the items that you're going to purchase for the business. And I mean, literally attach a cost to each of these items. And then this way, your lender or investor will be able to see how you plan to spend the money that they might give you. So that gives them a level of comfort, certainly, indeed. Then you've also got to think about what your operating costs will be every month, which means what's it going to cost to keep your business open every month? Because you're likely to have insurance payments. If you have liability insurance, for example, if you're renting a location, you'll have rent and utilities. If you're manufacturing an item, you're going to have raw materials. You're going to have office supplies. You're going to be consuming things in the business itself. And oh yes, then you need to come up with an estimate for your sales as when you're doing this, because your investors will want to see financial projections. Traditionally, a bank wants to see 3 years of financial projections, projecting out what you think your expenses are going to be, as well as what you think your sales are going to be. And usually the sales climb and increase as the business progresses month to month and gets older, and you start figuring out the best and most opportune ways to reach these potential customers. You'll start learning, what works. You'll be tweaking your SEO on your website and making sure that you help draw in more and more customers, maybe by being on TikTok or maybe by being on Pinterest. Whatever works, you'll start zeroing in and learning what drives customers to your business. So as you get things tweaked, then that's when hopefully your sales start increasing. And it could even be through word of mouth. Sometimes we have clients that do quite well with word of mouth, so that helps too. We love that because that's free. So many of these other things cost money. So these are some of the basics that you've got to think about when you're putting together your business plan. Certainly it's nice to have a cover page on it. And after you've gone through all the different sections of the business plan, that's when you want to write your executive summary, because indeed that executive summary is that page that you use. Usually you start off with your pitch about what attracts people to this business and what problem you're going to solve, and basically what's the benefit of the business. But usually you write your executive summary last, after you've written all the other sections of the business plan. But it helps to have executive summary that's only one page, that's succinct and to the point, and it covers the basic things about the business. I'm going to be selling this, and these are my potential customers. And I think in my first year of business, I'm going to make this much in sales. In my third year of business, I think I'm going to make this much in sales. Those kind of basic things go into the executive summary. And of course, there's a few lines about the management team. Those are the basic things that go in that executive summary. And venture capitalists in particular, when they're reviewing business plans and deciding who they're going to invest in, they flip to the executive summary and read it. And if that keeps their attention, then they flip to the back and look at the financial projections. And then they decide if they're going to read more of this business plan. It's what they've told me. That's pretty typical. So that's why you want to start off strong with the pitch and explain what benefits your business has. Other things can.
Sure, and I just want to say you're exactly right. We have Kevin Combs speaking at the workshop next week, who, if anyone doesn't know who Kevin Combs is, he's the head of Country Roads Angel Network, and he literally will say the same thing next week that Sharon just said.
Fantastic. Good. That's great. That's great to hear that. So, all righty. So we've covered a lot of different things in here. And what kind of questions do you have for me?
And Sharon, this is being recorded, and we'll share your information because I know some people feel more comfortable, sending a private email. So We'll give that information to the students as well, if anyone.
That's fine. They can call me or send me an email. Either way works. That's fine. All righty.
I have a question.
Sure.
Back to the accounting thing. When potential investors are looking at the plan, would they prefer like something like QuickBooks, or would they like it if you had like an actual like real life accountant, or do they not really care as long as you have something?
They have a level of comfort with QuickBooks. That's the most commonly used one. There's other types of accounting like Peachtree, but people tell me it's a lot harder to learn that. But what people are telling me is that they take classes and learn about QuickBooks. Sometimes when you get a pot of money from someone, and some of the microloans and small funds, they'll even help you get training on QuickBooks. Sometimes that opportunity happens. But yeah, you also want a CPA to help you do the taxes and sit down and make sure your QuickBooks is set up correctly when you get started. So you want both. That's a great question.
Awesome. Thank you.
Sure. I also
go ahead, Sharon.
I was just going to say, I also have a financial spreadsheet that helps you project out what it is that you think your business is going to do as far as your first year in business, as well as what your operating expenses would be. And if you'd like, I can forward that spreadsheet to you also, so you'll have it. It's an orange spreadsheet that we all use with the Small Business Development Center. And for example, with the first page helps you plug in what your cost will be to get this business up and running. There's a place in there to put in the loan amount and those kinds of things, and what you're going to spend right away on fixed assets and that kind of thing, that helps lead you through the financial projections. That's one of the things that's extremely important. And I'm happy to provide that spreadsheet that we use.
Perfect. Thank you, Sharon. And I think that is the perfect segue into talking and going a little bit deeper into financials. So next up, we have Amy Pridemore with the W Center for Financial Literacy and Education. So thank you, Sharon, so much. And Amy, welcome.
Thanks for having me. I'm going to try to share my screen here and see if we can get it to work. All right, can you see my PowerPoint now? Perfect. Well, as Tara said, my name is Amy Pridemore. I am the director of the Center for Financial Literacy and Education. I've included all of my contact information here that Tara will be more than happy to send to you if you guys need it after the presentation. And I also wanted to preface this by saying that a lot of this content came from the FDIC Money Smart program, which you guys are more than welcome to go check out if you need some more information about small business finances and that sort of thing. They have a huge index of knowledge and resources on the website. So I just wanted to preface that resource is available to you. What are some benefits of financial management as a small business? Well, first of all, you want to know what your profitability is. Is your business going to grow? Is it going to be profitable? Or are you going to lose money? You know, we never want to start a business in the red. We always want to keep that growth going, know that we're going to eventually be profitable, maybe not in the first year or two, but eventually we are going to get there because our sales are going to continue to grow and our assets are as well. So how do we do that? We can forecast our growth. We can know what expenses we're only going to have once, and maybe we're not going to have those again, and we're going to continue to grow our business after we put that initial investment in. You want to be able to plan for diversification, new product lines. How are you going to reach new markets? How are we going to expand this business and make it grow throughout the lifetime of the business? And finally, you want to be able to prepare for financing, whether that's an investor or whether that's loans through a commercial bank or some other avenue. So as Sharon talked a little bit about financial projections, excuse me. So what are financial projections? Well, this is going to be your forecast of your cash inflows and outlays. How much money are you bringing in each month versus how much money are you paying out in your expenses? This is going to show the key players how you plan to use the money and grow your business. Now, when you think about key players, again, these are going to be the investors. These are maybe going to be people at the banks that you're getting small business loans from, and maybe people that want to be involved in your business in some other form or fashion. So a financial projection includes your income statement, also known as a profit and loss statement, your balance sheet, and your cash flow statement, which we're going to talk about all here in depth here in just a little bit. So you might be asking, like, how do I make financial projections? Well, first of all, you want to project your sales and expenses. How much are you going to bring in each month? And what type of expenses are you going to have? Are those going to be rent expenses? Are those going to be advertising? Are those going to be utilities? Are you going to have production expenses? That sort of thing. Those are all going to be laid out and put against how much you're actually going to bring in each month. You want to create projections based on these numbers. Determine what financial needs you have. Do you have enough capital to start the business, or are you going to need to go out and look for an outside source? You want to use the projections for planning, and you also want to plan for contingencies because, as we all know, life happens. In our personal lives and also in business, things come up, things happen that we didn't plan for. So you always want to have a small pot of money that you plan for contingencies for those things that maybe you didn't budget for, but they are going to happen to come up. And then you're going to monitor these projections going forward. So I'm going to stop sharing my PowerPoint here for just a second. And I'm actually going to flip over and share my Excel file. Can you see that, everybody? Okay. So as Sharon said, she has a template that she is probably best that she emails out to you. But this is something that I found on Word. You can also Google financial projection templates, and you're going to have a ton of them come up. But I felt like this was a really good example to be able to show you what a projection looks like. So again, this is just a Google or an Excel template that I was able to pull off of Excel. So this actually has your startup costs. So, you would put your name of the business up here. What are your one-time costs? Maybe you have advertising that you're going to have to pay $100. Well, you're going to put in the months. So you're going to have 12 months. Maybe you know that it's going to cost $100 a month. And to retain this advertising agency, let's say it costs us $500 of a one-time cost. So this spreadsheet is actually going to add all of this up for you. Maybe you don't have any salaries right now and payroll taxes because you're the only person running the business. So So you could leave those blank, but maybe you have rent or a lease payment that you have to pay. Obviously, your utilities, internet, water, electricity, all of that comes with that. So let's assume maybe we have to pay $1,000 a month. We don't have any one-time cost unless maybe you have a security deposit that you have to pay down on the business to lease that space. So let's say that maybe that's $1,000. So you're going to see that that's going to cost us $13. I randomly put in turkey dinner because I wanted to show you that you were able to add rows here. So let's say that I wanted to have a networking event. And I knew that this was going to be a one-time cost of $500. I can put that in here, drag my cell down, and then it's going to calculate my numbers for me. So you don't have to, just because you have a template doesn't mean that's what you have to go with. You can now always add cells, take cells away, etc. So this is going to be your startup budget. How much is it going to take you to actually get started that very first year? They also have an example over here that you can see, what they've done with it. And then they have a profit and loss. So let's assume that you know that you're going to make $500 a month in sales. And you can take this and you can drag it all the way across to show that you're going to make $500. And again, the spreadsheet is going to be able to calculate these formulas for you. How much did you offer them in returns or discounts? What was your service revenue? Did you have any other revenue that came in other than product sales? What was your cost of goods sold? And here is your gross profit down here at the bottom. Now you're going to have your expenses. These are salaries, marketing, advertising, sales commissions, again, rent, any other expenses that you might have. So let's assume that we're going to pay $50 a month in sales commissions. We're going to drag this all the way across. We're going to pay $1,000 in rent, drag this all the way across. And you can see that because my expenses are more than what I'm bringing in product sales, right now I have a negative net income. So in this example, I'm going to need to figure out how to either get my sales up or bring in some more income to get that, so that we never want it to go below zero. Again, it might happen. You might have a net loss that first year because you have your startup costs first or second year until you really get yourself off the ground. But we'd really like that to be a positive number if we can make it that way. So before I move on, does anybody have any questions about the Excel spreadsheet? Do we all know how to use Excel pretty okay? We're good? All right, well, I'm going to jump back to my slideshow now. So when we think about financial statements, there are three main financial statements that we need to think about. Your balance sheet, which is going to show your assets, your debts, and your owner's equity. Your cash flow projection or statement, this is going to be how much cash you're bringing in and putting out each month, so you can actually see whether your business is liquid and you have enough to keep the business moving. And then you also have your income statement, which is also called your profit and loss. This is again where you're going to see how much money is coming in, how much money is going out, and whether your business is profitable. So what is a balance sheet? Well, it's a snapshot of your business at a specific point in time. So it is always going to be as of a specific date. Let's say that's December 31st. You want to close out your year and know what it is at that point. It's going to be what your assets and liabilities are at the end of that year, at the end of that period. It's not going to be a comprehensive look over a period of time. It is as of that specific date. This is going to report the dollar value of a company's assets, liabilities, and owner's equity, again, as of a specific date. Assets are what property you own. Is this any property, plant, and equipment? Is this any cash or checking accounts that you have? Is this anything in savings? Those are all assets and property. Liabilities is your debt. How much do you owe in a small business loan? How much do you owe when you bought that piece of equipment that you owe the company? You bought it on credit. How much do you owe that company? And then finally, the owner's equity is going to be the amount of assets that came from the owner. How much did you put in yourself? This is going to be able to tell you if the company is highly leveraged or if they're carrying too much debt. So again, when these banks are looking at you to know whether they can give you a small business loan or not, they aren't going to want to give you more than what you can comfortably take on. And they're going to want to look at your balance sheet to have too much debt for what you're actually bringing in. So this is an example of a balance sheet. Sorry, it looks a little blurry on the screen, but you're always going to have your assets. This is accounting 101. Your assets are always going to equal your liabilities plus your owner's equity. So the balance sheet will always equal those two categories. So again, your assets are going to be cash and other equipments, other current liabilities and long-term, other current assets and long-term assets as well, such as buildings, materials, that sort of thing. So you can see that the total assets equals 152,000. And then when we look down at the liabilities, what are our current liabilities? What are our current outstanding debts? What are our long-term liabilities? These are going to be longer than a year. And how much equity do we have left in the business? So that equity number is kind of a plug number that, you know, if you know your assets equal this and your liabilities equal this, then your equity is going to obviously have to be the balance of those because they always have to equal. So if, you know, like Sharon was talking, if you set up your QuickBooks and you run a quick balance sheet and you know that your assets do not equal your liabilities and equity, something's wrong with your program. So you just need to go back and look at that. But again, it's going to be as of a specific date, not over a period of time. So what about your cash flow statement? Well, this is a balance of your cash received less the amount of cash paid out over a period of time. So you might have people who are going to, we've heard of the buy now, pay later. You know, somebody, you might have invoiced them, but they may not have paid your invoice yet. So you haven't received that cash. So you can show it as revenue in your income statement, but you haven't gotten it yet in your hands. So this is actually going to show what cash you've received minus the amount of cash. So this is moving cash in or out of a business, and it's a good way to prepare and plan for your financing needs and is often required for business loan applications. They want to know that you're able to have enough cash on hand to cover your current expenses. This is an example of a cash flow statement. You want to have your cash flows from your operating activities, cash flows from investing activities, and cash flows from your financing activities. This is going to show your net increase or decrease in cash, and then you would show the cash at the beginning of the year versus the cash at the end of the year. So this is going to show your cash flows over a period of time, whether that's a month, whether that's 6 months, whether that's a quarter or a year. You'll be able to show the change in your cash. Finally, we have the income statement, which again is also called your profit and loss statement. It measures your revenue over a period of time, and it is one of the, actually probably the most important financial management report. Everybody wants to know what that bottom line is. Are you bringing in money or are you losing money? So the biggest difference that you want to remember about this and the balance sheet is that this is going to be over a period of time. It's going to show how much income you've brought in over that period of time, how much you've paid out in that period of time. So again, this could be over a month, this could be over a quarter, this could be over 6 months or even a year or longer, so that you're able to see how much came in and how much went out. Here's an example of a profit and loss statement for the year ended December 31st. So this is going to be over a specific year. This company brought in $1 million of sales. The cost of goods sold was $600,000. So they had a gross profit of $400,000. Then they had their operating expenses of advertisement, depreciation, rent, payroll taxes, salaries and wages, commission expenses, and other operating expenses for a total of $223,000. So when you take that gross profit minus their operating expenses, you have an operating income of $177,000. Now then they had some other non-operating income. So they had revenue from interest. Maybe they had some loans that were outstanding and they got some interest back on those. So that revenue equaled $10,500, but then they also had some expenses associated with that. So really they only made about $1,400 off of that non-operating income. So in total, it made $178,400 for the year. So again, in the most basic form, Your gross profit is always going to be your sales minus your cost of goods sold. And your net income is going to be that gross profit minus your operating income is going to get you your net income or loss for the year or whatever the period is. So your net profit is going to pay for your owner's draw. This is going to be how you pay yourself if you have enough money to be able to do that. It's going to be able to allow you to invest back in the business for future expansion, future equipment purposes. You could pay down some of, if you have a loan, you could pay down some of the principal to get that loan paid off faster. And also, unfortunately, as we all know, you're going to have to pay income taxes. So maybe that net profit goes to pay for some of your taxes as well. So when we think about a business, as before we start all of these financial statements, while these do need to be included in your business plan, once you get your business up and running, you really need to set down a budget. It's a critically important component of financial management. This is going to allow you to basically set up a plan. A budget is a plan for how you plan to spend your money, how much it's basically your financial projection, but when your business is up and running. So how much are you going to bring in? How much are we going to spend? And usually we would try to get a zero balance budget in our first couple of years. You want to be able to compare your budget with actual expenditures. So maybe you plan to spend $500 on materials in that first month, but you actually ended up spending $700. Where are you going to be able to take that extra $200 from? What other category can you take it from so that you don't overspend when you're looking at it as a whole? Make sure you track your monthly expenses and think about how that's going to help you with your business decisions. Do you need to change your budget so that you can include more money for the specific category next year? Or maybe you didn't spend as much as you thought, so you could put that money somewhere else. But it is a good tool for you to help plan for your expenses. As Sharon talked about a little bit, we're going to go into bookkeeping quickly. And this is basically the organized process of tracking all of your income and expense. It's the basis for all financial management, business decisions, financing, taxes, your owner's draw, and retirement. You can do this yourself using software such as QuickBooks, or you can use a bookkeeper or accountant. I've seen both where people maybe are just really, I feel like QuickBooks is a really easy software to teach yourself how to use. There are quite a few programs, like they were saying, there's quite a few training programs that would teach you how to use it as well. And I think that for an everyday sort of business that you would be able to do this on your own, but you definitely do need to have that accountant that helps you with your taxes whenever it comes tax time. The last thing that you want to do is get audited, have your business be audited, and find out that you weren't paying something along the line. So I feel like it's very important to enlist the help of the CPA whenever it comes to taxes so that you don't miss something there. And finally, we're going to talk a little bit about business financing. So how can you finance your business? Well, you can first finance it through equity financing, meaning that you yourself is going to put in the money to start the business, whether it comes from your savings or maybe some family would like to put in some money. It could also come from venture capital, meaning that you have investors who are interested in putting that money into your business. There can be debt financing that are borrowed funds that are paid back. So think about commercial loans or maybe even some individual who is willing to give you that money that you need to pay back. You have working capital that's used to acquire funds needed to run daily operations. And then you have fixed asset financing, like I talked about earlier, that's used for purchasing equipment, vehicles, and real estate. So think about an auto loan or equipment loan, et cetera, that you could use to purchase your equipment needed to run the business. So how do you get ready for a loan? Well, first of all, you need to have a business plan, which is you guys are already on the right track for that. You're getting that started. You want to know what you can afford. You want to study those financial statements. You want to know them back and forth. If you're sitting down in a meeting with a potential creditor, you want to be able to explain to them how you plan to make money. You don't want to what comes out of your mouth to be different than what's actually on paper in front of them. So you want to know these back and forth. You want to be able to check your credit report. Your credit score is very, very, very important when it comes to this, especially when you have a new business. The banks don't have anything to look at to know that you are creditworthy, of your business is creditworthy of them giving you a loan. So your own personal credit is really important in this respect, because if you have a poor credit score, then that usually means that you're not a very trustworthy loan recipient. You don't pay things back very easily. So they're not quite as likely to give you a small business loan. But if you have a high credit score, that means that you are a trustworthy borrower, and that they are more likely to give you a business loan if your business plan can back that up. You want to establish any collateral options. This means what can you offer to them so that they would have something to relinquish or to take over if you would default on the loan. So let's think about this, not outside of a business. When you think about your car loan, your car is the collateral that if you would ever default on that loan, the bank can go and take your car. So what type of collateral options do you have in the business to secure these loans to allow you to have maybe a little bit of a lower interest rate and have a little bit more backing from the bank to make sure that you're able to pay these back? You want to show that you have an equity contribution, meaning that you have skin in the game. You are not willing to let this business fall because you're going to lose money if it falls. So they want to know that you're invested in this as well, and research what your financing options are. Go look at different banks, go look at different institutions and see what works best for you. So what are the criteria for qualifying for a loan? Obviously, you want to have a good credit score. The equity contribution, again, they want to make sure that you have put in some sweat equity into this. You have your own skin in the game, that you have contributed to this business. What is your ability to repay this loan? And what's the loan to value ratio? Normally that's 70 to 90% market value of an asset. So again, let's use that vehicle example, that if it costs, $100,000 or whatever this asset is, cost $100,000, they're probably not going to loan you $95,000 for that. They want to stay between 70 to 90% of that. So they would loan you anywhere from 70,000 to 90,000, but they wouldn't give you any more than that. And again, that all depends on your credit score. So some other things that you want to consider that we don't necessarily have time to get into today, but is credit reporting. What type of insurance do you need for your business? What type of risk management do you want to do? Again, tax planning and reporting. We could talk all day on tax planning. And obviously your banking services, record keeping, which bank do you want to use and go through whenever you are starting your business and moving forward. So I know I didn't take up my full time there, Tara, but do we have any questions for anybody?
I have one question, talking about when you go to apply for certain loans through banks and they'll take a look at some specific information, mostly in relation to how much is leveraged. And I was curious for new businesses, if there's a specific leverage ratio you want to target, or if it just varies too wildly for it to be like a specific number a bank is looking for.
Karen, do you know the answer to that?
When a brand new business goes to a banker, they want to know what's the dollar amount that you're looking for. So say it's $100,000 total you need for this business. The banker's only going to be interested in loaning 80% of that money. So they'll consider loaning you $80,000, but they're looking for you to have the other 20% of the money in cash. Whether you have that in savings or borrow it from friends and family or your grandma, I mean, they're still going to look for you to have skin in the game. So, and then they also want to see an asset put up against that $80,000, which more than likely would be a house. Maybe in a few cases I've seen where grandma actually put up her house because it was debt free. So, but indeed, it's tough first for a very young business to get a loan. That's why luckily there are other options besides going strictly to a bank for these young entrepreneurs that that deserve a chance to get started, but they don't have a lot of assets or cash to put up to get the business started. So there are other opportunities like the First Microloan in West Virginia. They'll take a chance on someone. Up to $50,000 is what they have available. But indeed, they like to have some kind of collateral too. But I've seen them take other things. If a house is not available, I've seen them take other things like inventory and laptop computers, which a bank would just laugh at. Like, what? That computer starts losing value as soon as you take it out of the box. You can't use that as collateral. That's what a banker would say. So there are some other opportunities, and that's where we try to look at all the different types of funding that's out there. So that's a good question. We have to look and turn over all the rocks sometimes to look for funding for young entrepreneurs.
Sharon, have you
Yeah.
also found that smaller banks sometimes are more willing to give loans than larger banks are, because larger banks have to follow strict debt to equity ratios and that sort of thing?
Years
but
ago in the
smaller banks-
1990s, we still saw some bankers, if the young entrepreneur was a member of an upstanding family in that community, we would see these bankers do those kinds of small loans to get someone started, sometimes even without collateral. But now there's so many regulations, and these even small banks have shareholders they have to answer to. So we don't see much of that character lending that used to go on years ago, more than 20 years ago now. There's just a lot of regulations with banks now.
Absolutely.
Good questions.
Yeah, enough.
And sorry, I was just going to mention, and one of Sharon's good friends, Tim James, he is a banker and he has volunteered to help anyone that emails him with their financial projections. So Dallas will put that in the email with the video that goes out today as well.
He's very good. He used to be with the Small Business Development Center. He has a lot of experience in accounting. Now he represents the First Microloan of West Virginia. So he's seen spreadsheets for all different kinds of businesses, and he's a wealth of information. So, talk to Tim too. That'd be great. He may even be the one that helps you get that first loan, because for a lot of young entrepreneurs, we use that First Microloan program. I had a call just yesterday from someone with a food truck, and he actually started during the pandemic, and now he's been in business all of 5 months, and he's actually starting to make a profit. But he's learned already that if he buys the food in bulk, then he'll get a better price on his products, and he can freeze some of this food. So he wants to get a microloan in order to buy a large quantity of the food that he needs, and he can store it, and that'll help him to be more profitable going out. So this guy doesn't have a lot of assets except a used food truck at this point, but maybe the microloan fund will take it. So it's a nonprofit. There's a few other nonprofits out there like that. But that microloan program is probably the number one thing that we use for that kind of situation where it's a young growing company.
Awesome. That makes a lot of sense. Thank you.
Good.
And then I just had one follow-up question, specifically talking on how credit reporting is especially important, again, when we're in kind of a loan situation with a bank. But I was curious if you would ever look to share any sort of credit history with venture capitalists or other investors, or if that type of information is more reserved for a purely banking situation.
I think
My
so.
initial, go ahead, Sharon. I was just going to say my initial reaction would be not to, unless they asked for it. But I'll defer to Sharon on that one as well.
Well, that's true, Amy. You don't share that kind of thing in your business plan. You don't get into all that information about debt. If that lender or venture capitalist wants it, you would have to sign a statement saying that you're giving them permission to pull your credit report. Now they will, a venture capitalist and a banker too, but well, say you're working with a VC, they're going to ask you how much debt the business has. Sometimes by the time someone goes and talks to a VC, they've already gotten a loan from maybe a family friend or a relative. So there may already be a $20,000 loan on the books. So, because they've got to take that into account as to whether or not they're going to invest in a business. So likely they're going to ask about debt. What debt does the business have already? Have you signed any loan documents already? That kind of thing. Good question.
Got it. Thank you.
Mm-hmm.
Do we have any other questions? All right. Well, thank you, Amy. We appreciate you taking the time to be here today, and we will share your information in that email that goes out tonight as well. So if anyone has any questions that pop up later, you can email Amy that. And we are going to segue into business law. So thank you, John Williams with the W Entrepreneurship Innovation Law Clinic, for being here today. We're going to turn it over to you.
Hi, guys. Yeah, so can I share my screen, Tara? All right. We'll bring it up here.
Yep, you should be able to.
Let's see if I can get slideshow going. Is that working? All right. Can everybody hear me well? I am in my house, okay? And I've locked my cats up so they're not going to jump on like they normally do. But yeah, so I am John Williams, as Tara mentioned. I am the program director of the Entrepreneurship and Innovation Law Clinic at the West Virginia College of Law. I usually speak for about 45 minutes to an hour. I think I only have until 12 before you guys get lunch. So I'm going to try to go through my spiel relatively quickly and just give you a crash course of business formation and talk about some of the most important topics that you should be aware of when you are forming your business. I also usually do this as more of an interactive kind of presentation, but because of Zoom, I'm just going to hit you with a bunch of information. And if you have questions throughout, please feel free just to shoot them in the chat and I'll try to get to them at that point. I'll also try to allot 5 or 10 minutes at the end to answer any questions. It's very hard to follow up obtaining loans. So, this might be boring to some of you, especially to the ones that have already went through the process of formation. But I do think that there's a lot of valuable information that you're going to get out of this. So with that said, let me minimize this so I can see. Yeah, so real quick, what I do is our clinic is a free legal transactional law clinic at the College of Law. The only thing that we do not cover is filing fees, and we represent clients throughout the state of West Virginia. So if you're located in Charleston, Beckley, or Morgantown, whatever, as long as your business is operating in West Virginia, you can apply to our clinic. The clinic is an outlet for third-year law students to practice under a supervising attorney such as myself. So you will be working with students who are somewhat around the same age of you. Like I said, we provide small business, nonprofit legal assistance. And here's some of the main areas of representation that we provide. Now, this isn't necessarily all encompassing. So if there's something more specific to your company, please feel free to reach out and ask if that's something that we take care of. The only thing that the only two things that commonly are asked that we do not handle is first litigation. We will not engage in any form of litigation or the potential of litigation. So if you're having an issue with a contract, or if you're filing something that we think might spur some organization of filing a lawsuit, that's just something that we're not going to be able to take care of. The second most common type is patent law. We do outsource that work. So if you do have a patent question, feel free to reach out to us and we will try to get you in contact with somebody who can answer that for you. Well, let me bring up my clock just so okay. Yeah, so the first step in forming your business, and I have notes down here, so if I look down, that's what I'm doing. So the first step in forming your business is determining what type of business you would like to file for. or a form, and that is called selecting an entity. There are numerous types of entities to select, but some of the most common types are sole proprietorship, general partnership, limited liability company, and corporation. I'm just going to touch on those in the interest of time, and then we'll get into the actual process of forming those companies. So what is a sole proprietorship? A sole proprietorship, some of you already probably have. You don't actually have to file anything with the West Virginia Secretary of State in order to operate a sole proprietorship. A sole proprietorship is just an individual engaging in any form of business. A common example of that would be a handyman, or even selling stuff maybe on eBay or Facebook Marketplace. That could be considered operating a sole proprietorship. Similar to that, a general partnership. It's the same thing, where you don't have to file anything with the Secretary of State to form. That's just 2 or more people engaging in an act that could be considered a business practice. The big thing about a general partnership, however, is you will have to file taxes, partnership tax return for the partnership, to let the IRS know that there was income made for the partnership and how much income was distributed to the partners. So it's common misconception that if you haven't filed anything with the Secretary of State, you don't already have a business. These 2 types of organizations we never recommend, and the big reason for that is they do not come with limited liability. What is limited liability? Limited liability is the ability for your organization to bear the brunt of any kind of lawsuit or litigation that may occur, right? So say I'm operating a handyman service and I build a deck, and the deck malfunctions in some way and injures somebody on the deck. If I am sued and I'm not operating a limited liability company and I'm only operating, say, a sole proprietorship, they can sue for my house, for my car, for my personal assets. However, if I have formed and operated accordingly for a limited liability company or a corporation, the only assets that can be claimed or sued for would be the assets of that company. So it is super beneficial to go ahead and file these documents if you plan to operate business. That way you can, like they're called, limit your liability. So the most common one that occurs right now for small businesses is the limited liability company. You can form what is called a single member limited liability company, which is just one individual, or you can form a limited liability company for multiple individuals. I think I'm going to get into more specifics of the limited liability company, but it is relatively new in the grand scheme of things. It takes all the benefits of the partnership pass through taxation and gives you that limited liability. And we'll talk a little bit about how they're taxed and what I mean by pass-through taxation in just a bit. The next most common type of company that is formed are corporations. Corporations are typically larger forms of entities. They are operated with a board of directors, and we'll get a little bit into that. But you have to think about like Apple or Facebook, or I guess it's Meta at this point. But those are types of companies that are corporations. Another thing that you might encounter, and I just want to touch on it real quick, is an S corporation. If you talk to an accountant when you're first filing or forming your company, they may recommend an S corporation. An S corporation is not technically an entity, and I'll get into a little bit more about S corporations and why I usually don't recommend them. But it is a tax election. It will give you some beneficial tax treatments that aren't necessarily allotted to organizations like corporations and limited liability companies. Right. And then, as you can see, there's other types of entities that are potential selections for you. So I do highly recommend that you reach out to an attorney before you select one of these entities, just to make sure that you're picking the one that's best for your company and not necessarily the most common. Additionally, we work with nonprofits, benefit corporations, things of that nature. So before you select your company, what are the most important considerations that you need to take into account before you determine what entity is best for you? So first one is ownership and control. How much ownership and how much control do you want to have over your organization? Do you plan to make all of the decisions? Do you plan to be the only person that has the final decision, or do you want to divvy that up amongst a group of people in order to allow for the best operation of the company, right? So if you're going to do, if you want to have more ownership and control, you might want to consider that LLC route. If you want to have a company that is formed that kind of branches all of the ownership out to a board of directors, then you might go with that corporation. Additionally, size, right? So if you're a smaller company, if you only plan on operating in West Virginia for the near future, you might want to go with an LLC. Whereas if you plan to operate outside of the state or even internationally, eventually going public, you're likely going to want to select a corporation. Same thing with growth. How big do you want to be and how quickly do you want to grow? The big thing about growth here is obtaining investments. It's more likely that you are going to be able to obtain investments if you're a corporation, because investors typically do not want to have any management duties whatsoever in the company. So they were more likely to give money to a corporation where they just receive shares and receive that passive income down the line. Whereas as an LLC, it's less likely that you will obtain investment from major investment corporations. Another major consideration is purpose, right? So if you're purely for profit, if you're forming this business specifically so you can make money, then you're not going to want to form a benefit corporation or a nonprofit. You're going to want to form one of the entities that is formed specifically for making a profit. However, if you do have some kind of community beneficial purpose, then you might want to go down the avenue of forming, say, a benefit corporation. And some common types of benefit corporations, or an example of a benefit corporation would be Kickstarter, right? So Kickstarter is not necessarily a nonprofit company, but it does have a beneficial aspect of connecting small businesses to micro investments, right? So they have formed a benefit corporation. Additionally, companies like that say 10% of all of our profits go to buying shoes for children in remote parts of Africa, right? That might be a type of a benefit corporation. Another consideration is liability. How much risk do you want to take on personally, or do you want to try to set yourself up to limit as much risk as possible? There's something called piercing the corporate veil, which I'm not going to get into depth with that, but basically it's less likely that you'll ever be subject personally to any liability if you are a corporation as opposed to an LLC, which if you're operating a single member LLC, there's arguments to be made that you're operating it individually as opposed to as a business entity that has that shield of liability. And finally, taxation. This is huge, obviously. How can you set up your company to limit the most taxes, right? So limited liability companies have that beneficial pass-through taxation that I mentioned a little on the last slide. And what do I mean by pass-through taxation? Pass-through taxation is when your company makes some form of money, right? As an LLC, you wouldn't actually pay taxes as the LLC. It would pass through the organization, and the owners of that LLC, whether it be a single member or a partner, would pay the taxes on that income on their personal tax return. So they're only getting taxed once, right? There is an additional tax that these owners would have to pay that I'll talk to you a little bit about in the next slide. But there is that only that one layer of taxation. Whereas in a corporation, there's what is called double taxation, which I mean the corporation pays taxes on the income it makes, and then when it distributes that income to its shareholders, they pay taxes on those dividends as well. So there's double taxation. There's a different tax rate for individuals and corporations as well, and that changes every year, but changes drastically every presidential election. So it really depends on what the tax treatment is at the time that you're forming your business. That will set you up. But like I said, it might be best to think, hey, if it's up in the air right now, to not consider taxation as much as growth and size and control as you would, because that could drastically change overnight. All right. So yeah, so I'm going to quickly touch on the differences of an LLC and a corporation and why you might want to choose them. I think I've already kind of went through that, but this kind of outlines it a little bit, straightforward for you. Like I said, an LLC and a corporation both have that limited liability shield. An LLC is smaller in size, and you can also have a sole member LLC or a single member LLC, which means only one individual is forming that LLC. Whereas in a corporation, it's going to be typically larger in size. It's going to be ran by a board of directors. You can actually form a corporation with one individual in West Virginia, but they're typically at least 3 board members, a treasurer, secretary, and a president. In an LLC, it is owned and managed by its members. Members will make the major decisions of the company, whereas in a corporation, it's owned by the shareholders. The shareholders will elect the board of directors, and the board of directors make the major decisions. Not necessarily all management decisions are made by the board of directors. The board of directors typically will appoint a CEO, a CFO, and staff members to manage the day-to-day operations, who will then report to the board members at an annual board meeting or quarterly to allow them to make major decisions such as mergers, acquisitions, major sales, that kind of good thing. As I mentioned, LLCs have that less investment opportunity, whereas corporations have a greater investment opportunity, and LLCs have pass-through taxation, and corporations have the double taxation. Are there any questions about any of this before I go on? I know I kind of ran through it pretty quickly. All right, awesome. Yes, so the next thing that I'd like to talk about is that S corporation tax election. Like I said, it is not a business entity. It is a tax election that is afforded to both LLCs and corporations. So the way that it works is when you form that company, you can elect to be taxed differently. So if I form an LLC, I can elect to be taxed as a corporation. If I form a corporation, I can elect to be taxed as an S corporation. And what an S corporation is, and just to kind of backtrack, if you form an LLC, you can elect to be taxed as a corporation, which then elects to be taxed as an S corporation. So kind of gets confusing, but you can obtain that S corporation status for both. But what it does is it allows you to hold money in your company without having to actually pay tax on that income at the time of earning it. So when an LLC receives income, the owners of that LLC have to pay tax on that income at the point that it is earned, not at the point that they distribute it to themselves. So when you are just opening up a new LLC, and this is why accountants typically recommend this, but when you're opening up a new LLC and say you sell t-shirts, your first sale, right, $25 t-shirt, you're going to have to pay income tax on that. Even if you keep it in the company to buy more t-shirts or to just have it as a cushion for something later, you're going to have to report that to the IRS and pay taxes on it at the time it is earned. And that's obviously after deductions and so forth. An S corporation doesn't require that. An S corporation allows you to hold that in the company and only pay taxes on the distribution. Another reason that accountants might recommend this is no self-employment tax. And self-employment tax is that additional taxation that I mentioned with LLCs, where that income that tax that you're paying on your income, whenever you file your taxes coming up in a couple of months, if any of you file your own taxes, if there will be a section that asks if you've made any income from a business, right? What you would be paying on that is called self-employment tax. So if you've ever worked anywhere, you will see that federal taxes get taken out of your check. And what self-employment tax is, well, whenever you see that federal taxes being taken out of your check, what a lot of people don't realize is that the business is also paying that exact amount that is taken out of your check in FICA. So what self-employment tax does is it requires the self-employed individual to pay both the employee and employer's portion of that taxation. So a lot of people don't realize, until they have to go pay taxes, that you're actually paying double than you would normally think. So S corporations allow for that to not be included in your tax reporting. You will only pay taxes on ordinary income, any salary you pay for yourself. That's another benefit of S corporations. You can actually pay yourself salary, and capital gains. Now, why do I never recommend them? Because there's massive limitations to S corporations. And if you've already if you come to my office and you say, hey, I think about forming an S corporation, there's very, very minimal types of organizations that I would recommend form S corporation, just because of the drastic limitations that are placed on S corporation. A type of organization that I may recommend it for would be a single person who wants to do consulting on the side, right? Never wants to grow, just wants to operate in their hometown. That might be something that I would recommend an S corporation for. Probably still wouldn't, just because things change down the line. But I argue with accountants all the time. Well, so the limitations that come with S corporation status are the amount of shareholders you can have. So if you are in a corporation, you can sell shares of stock. In an S corporation, you can only have 100 shareholders, and those shareholders must be individuals. So you're never going to be able to bring some investment company or any company into your business as owner, as an S corp. You can only have individuals. It's typically done with family members whenever an S corporation is formed. Additionally, you're going to have one class of stock. In a corporation, you might have different types of capital stock, such as common stock, which is what you think of when you think of like Robinhood or just any of the stock that you purchase on the NASDAQ. And then there's also additional types of stock, such as like preferred stock, which is typically afforded to larger investors. They get beneficial preference for distributions, things of that nature. But in S corp, you can only have one class of stock. Additionally, you can only have 25% limitation on passive income. That might be the sale of intellectual property, giving royalties away, or receiving royalties or anything of that nature. So there are drastic limitations. Also, you can never go international. Shareholders must be U.S. citizens. So there are major limitations to your growth. And whenever someone or a company comes into my office, even though you are just now starting, you never know where your business is going to go. It could take one contract, one major opportunity, and you can now be a multi-million-dollar company. So I never recommend them unless it's 100% I'm not growing and I'm only doing very minimal services. So how do you form your business? Now, you can do all of this through the West Virginia Business Formation website. I usually typically do it paper format. However, this West Virginia Secretary of State has set this up to make it easier for you. So I assume all of you right now have came up with a name for the company that you have. What I would first recommend doing is going to the West Virginia Secretary of State Business Entity Search, typing in your name to determine whether or not that name is available. It really occurs a lot with common names, that there might be another organization out there with the same name. So for example, I'm going to go with Williams Handyman Services. It's a very common name. I have my last name and then I have what I do. They're likely, I mean, my name is John Williams. There's likely another John Williams out there, and it's possible he's running a handyman company. So you really need to make sure that before you do any formation that you've checked to make sure that your name is available. So whenever you do apply for this for formation, you're not hit with a letter from the Secretary of State that says, hey, you can't have this name, even though you've been operating and you have developed all your marketing materials and everything about this name. You have to change it at that point. So go on to the West Virginia Secretary of State's Business Entity Search and conduct that search. Now, the big thing about it is it doesn't have to necessarily be the exact name. It could be very similar. So if my company is John's Handyman Service, and then there's another company called John's Handyman Services, that would still be a conflict. Additionally, if it's John's Handyman Services LLC, and there's another John's Handyman Services who formed a corporation, it doesn't matter. That would still be an issue. So it's very important that you make sure that your name is available and distinguishable from other names. So when you're conducting that search, don't just search for your name, search for, remove the S or remove any of your endings, and search for the main portion of your name to see if there's other organizations out there. So after you've determined whether or not your name is available, you can actually real quick, you can actually file, if you don't plan to form this company at this point, you could file what is called a name reservation with the Secretary of State that will reserve your name for a period of 6 months. I think it's $25 to do so. And then you can ensure later down the line, whenever you do speak to an attorney and go through this process, or just whenever you're filing the documents, that name is going to be available. I 100% recommend it for more common types of names. The next thing that you're going to want to do is obtain what is called a Federal Employer Identification Number, or an EIN. You do this through the IRS's website. So what is an EIN? An EIN is essentially the social security number for the company. You're going to use this for when you hire employees, when you open a bank account, when you file any documents with the state, you're going to need that to have that EIN. When you pay your taxes, all of that comes with that EIN. It's free. You can get it on the IRS's website. I do recommend that whenever you go to do this, go through it once and then back it, because you only have 15 minutes to complete it. And once you complete it, it's very difficult to change any of the information that you put on this system. I think it's the most jacked up system, or that, well, the IRS is jacked up in general, but this is a timed system. And if you mess up, it's very difficult to change, and you only get one per company. I've actually encountered somebody who has obtained an EIN through this system, went to go open up a bank account, and the bank account informed them that their EIN was also someone else's social security number. So they had to go through this lengthy process to get a new EIN, which should never encounter an individual, or should never be similar to an individual social security number. So just be aware it's not bulletproof, but you can go through this. It's going to ask you the name of the company, your address, what type of company you have, and it'll pop you out a number that you're going to use when you file the rest of your document. Trying to think if there's anything else I want to talk about the EIN. Don't believe so. Okay, so we'll move on. The next thing you're going to want to do is you're going to want to file your form or obtain your or file your formation documents with the Secretary of State's office. Now, if you're filing an LLC, it's going to be called an Articles of Organization. And if you're filing a corporation, it's going to be called an Articles of Incorporation. The Articles of Organizations form LLD1 on the Secretary of State's website. When you file, you're going to have to remember that your name must include the appropriate abbreviation. So if you're filing for an LLC, it's going to be John's Handyman Services LLC or John's Handyman Services Limited Liability Company. You're going to want to determine whether or not it's an at-will or a term company. At-will just means it's going to continue until it's dissolved by the owners, or a term will have a specific date that it dissolves. I rarely see that, but it is a consideration we make. The one that I encounter a lot that people don't really get when they're filing it is whether or not they want to be a member managed or a manager managed LLC. All this means is a member managed LLC is owned and operated and managed by the owners, the members of the LLC. Whereas a manager managed LLC, the owners appoint somebody to make the major decisions of the company. Now there's some decisions that the manager can't make, but for the most part, you're granting a bunch of authority to somebody to run your company. I see this a lot when you have a financial guy and an operating guy, right? The financial guy will say, hey, I don't want any authority here. I'm just going to appoint everything to the operating guy who is going to manage the day-to-day operations, right? Typically, if it's just a single member, you're going to always do member managed. And also, if you just have a partner and you're both highly engaged in the company, you're going to select member managed. Okay. Articles of Incorporation, that is for a corporation, it's Form CD1. Both of these filings are $100 with the Secretary of State, and we'll talk about how we can possibly get rid of that or waive that fee. But when you go through the process at the end, it's going to ask you for payment, and it will be $100 unless we can find an avenue to get around that. Same as the Articles of Organization, you're going to have to include the abbreviation. I do want to mention registered agent. A lot of students, when they come to my office, they're from other states, right? A registered agent is somebody who has to be located in West Virginia to accept service of process on behalf of the company. So if the company gets sued, there has to be someone physically located in West Virginia to receive that lawsuit. If you've ever seen a TV show where it's like you've been served, that's what a registered agent is. So if you do plan to leave the state, just remember that you have to find somebody to be in West Virginia that you can list on the filing that can accept that service process on behalf of the corporation. There are third parties out there that do act as registered agents for minimal fees. So it might just be something that you look into. Additionally, whenever you're filing for an Articles of Incorporation, you want to list the amount of capital stock that you're going to authorize. I highly recommend that if you are going to form a corporation, to reach out to an attorney. This can be very complicated, and I'm not going to dive, just in the interest of time, I'm not going to dive a lot into capital stock, but it is required to be listed on your Articles of Incorporation. So if you're not sure about how much stock you want to authorize or issue at that time, you should speak to an attorney, kind of guide you through that process. All right, so how can you not pay the fee? So luckily, a lot of you are going to be between the age of 18 and 30. Now, Tara, do we have high school students here as well?
Yep, we have high school and college students. And I also wanted to point out that we have the Secretary of State himself, Mac Warner. He'll be speaking next week. So that's why I want them to hear you first, so they be prepared to hear from him next week.
Yeah, so the cool thing about being young and starting a business is that you can get these fees waived in West Virginia through something called the Young Entrepreneurship Act. You have to be between the ages of 18 and 30. If you're a high school student, I think that I don't know about the high school student. I don't believe that under 18 works, but you'll have to have somebody represent you anyway, because it's difficult for you to enter into agreements as a 16-year-old, right? So I would say, you know, if you have an older brother or an older sister to act as the incorporator of your company, you can get this fee waived. You just have to reside in West Virginia, and you have to be between the ages of 18 and 30. All you have to do is attach a copy of your driver's license and proof of residency. Same thing, kind of like the DMV, where you can attach your lease, or you can attach, you know, 2 bills that show your name. Additionally, another way that you can get this waived is if you are a veteran-owned business. So if you are a veteran, or if you've served in the military, you have to be 51% owner of the business, but you can have this fee waived. All you have to do is attach your DD-214 or your military ID if you're active. Additionally, if your spouse is a veteran, that is a new addition to this fee waiver. As long as your spouse or you own 51% of the business and your spouse is serving or served in the military, you can also have that fee waived. The next thing you're going to have to file is the West Virginia State Tax Registration. This is a $30 filing fee. You can get this through the West Virginia State Tax Department's website. It's under Biz App. I've included a link here, and I'll send Tara a copy of these slides. I will also send you guys, and I meant to send this to you last week, Tara, or when I returned. I'm going to send you guys a kit that will show you everything that I've talked about now, and go a little bit more in depth with the organization filings for an LLC. So she can send that out to you guys so you can look through it. And if you have any questions about any of this, feel free to reach out to me. But you're going to file the state tax registration, and this is just putting the West Virginia State Tax Department on notice that you're operating a business. It's a $30 filing fee. You have to have a physical address in West Virginia to list on this document. But what you're doing is, like I said, putting the West Virginia State Tax Department on notice that you're operating a business, as well as opening up an unemployment compensation account. So even if you don't have any employees, you're required by law to open up an unemployment compensation account, and that will be attached to this application. What you're going to do on that last page is just say, I don't have any employees. I don't plan to have any employees, NA. And that will suffice. Oh, and just because we have time, the next steps, operating agreement, that's your internal governance document. I highly recommend, the thing that I'm sending out to you guys will have a sample operating agreement in it. And this is just going to govern everything like voting, everything that's in the articles, membership interests, so on and so forth, as well as your bylaws. If you're a corporation, like I said, this is actually required by code. And they're going to cover everything like shareholder provisions, board meetings, officers, voting members, etc. I told you guys I could talk for hours about all of this. But yeah, with that said, does anybody have questions? I know you guys are eager to get to lunch. Oh, we got a chat. What was that saying? Oh,
John, that was great. You were like right on time. I appreciate that.
Oh, well, I missed my 2 last slides that I could talk to him about.
Well, I just wanted to make sure that everyone is aware, if you win money from the business plan competition, we will only pay your business. We are not going to pay you as an individual. So that is why John is here. So if you have questions, you are more than welcome to ask them right now, or you can reach out to John directly. We will share his information, and he's going to be sending along that packet with other information that he just talked about today. But you will have to decide, are you going to be an LLC? Are you a corporation? Are you a B Corp? Whatever that is, you do need to decide that. And we will have the Secretary of State, Mac Warner, here next week at the workshop, so you can ask additional questions, but we wanted to make sure that you had a lawyer to listen to before you got to hear from the Secretary of State.
Well, thank you guys so much for having me then, and congratulations for getting this far. You should be really proud of yourselves, and I look forward to seeing you guys in the future.
Thanks, John. We appreciate you.
No problem. There you go.
All right, so we are going to wrap up here. Are there any general questions about the competition or the final round? Just know that we do have another part 2 of the workshop next Friday. that will be covering marketing. The Secretary of State will actually have Kevin Combs with Country Roads Angel Network to talk to you about what investors are looking for and how to put together that final pitch presentation. But if you have any questions about the competition as a whole or what you heard today, I'm happy to try and answer those questions.
I do have one. So on the business plan, the last one was 5 pages and this one's 10 pages. Are we using the same rubric we got from the last one, or
So
are we?
you are correct that this one will be maximum 10 pages, and then you can have as many appendices as you would like. So maybe your financial projections, those would not count against the page content. So it's 10 pages of content. And this is not scored. There will not be a rubric. You will get general feedback, but what we're doing is bringing actual investors in. So you're not going to get a score 1 to 5. You're going to get real world feedback and real world money on this one.
Yeah, but I didn't know if we had to, like, if there was a certain thing they wanted us to follow, or.
Yeah, so Sharon, what she went over today in the business plan, it's called, I think, the winning business plan. We will send that template out. You do not have to follow the template. That is just a suggestion from the West Virginia Small Business Development Center. You are more than welcome to look online if you find something that you think fits better. But we will give you a template if you would like to follow that. But again, I would encourage you guys to be creative and really push the bounds of what you can do. But yes, we will have a template, but no, there will not be a scoring rubric for that template.
Okay.
Dallas, do you have anything else for them?
I do not. Just a reminder that the next workshop will be next week on Friday at 10 o'clock, and that'll run until about 12:45.
And please follow us on social media. And if you guys will come off of hiding, we would love to take a little picture before we finish up here.